The IPO market has been picking up, but there's still a lot of uncertainty around the economy. Christian Munafo is the Chief Investment Officer and Portfolio Manager at Liberty Street Advisors to talk about all this. It's been fun to kind of watch and cover, and been some really exciting IPOs so far this year. It's been a while since we've seen that.
It has. Yeah, it's been a long time coming. So we're quite excited about it. I think we came into 25 expecting to see an increase in capital formation, in IPOs and M&A activity. And I think we've largely seen that. I think the tariff dynamics in April put a bit of a shock to the system and slowed things down temporarily. But as we're seeing, I think the market largely has shrugged it off thus far. We'll see what happens kind of day to day. But yeah, we're excited about the momentum.
What do you think is behind that increased activity in IPOs?
Well, there's been essentially almost no activity the last 3-4 years, especially for tech-backed IPO activity. And a lot of these companies are generating exceptional operating metrics that, frankly, we haven't even seen before in pre-IPO backlog. And so I think the markets are now looking at the scale of these companies. There's a greater level of conviction in the macro. I think there's a greater conviction of capital formation picking up, regulatory bottlenecks perhaps being lifted. And so we're seeing companies get out. We're excited.
Yeah. And there are interesting fields too, like crypto, stable coins, and space technology. And I mean, you can tell we're entering a new era of economic drivers with some of these companies that have been going public. You mentioned the tariffs. So is the worst over, do you think? Or?
Yeah, I think the honest answer is no one really knows by now. I think we've surveyed, we have almost 80 companies in our portfolio that are all tech innovation oriented. These are not companies largely in the business of importing and exporting hard assets. There's been a lot of exemptions given to technology, innovation, electronics-oriented companies. I think the question is, if there's going to be a slowdown in purchasing, right? If customers purchase less widgets, right? Is that going to impact growth metrics and margins, right? So can customers pass those costs on to the customers? Do they have to absorb them themselves? Are there going to be supply chain disruptions? So I think so far we're feeling quite good, and we've had positive feedback from our companies, but we get paid to be paranoid.
Yeah.
And so we're paranoid.
It's a good quality to have if you're in this industry. That's for sure.
But so far I think we think the market and our portfolio in particular, this late stage private innovation industry, has been able to handle it quite well.
What are you seeing at late stage versus early stage?
Yeah. So look, I think overall, both markets, we've seen a lot more discipline in the past several years following the 11 consecutive interest rates, right? Beginning in 22, that kind of sent a shock to the system. And so I think investors, there's been a flight to quality in terms of allocations to managers, as well as allocations to assets, whether it be early and late stage. In the area that we focus on, Q1 of this year actually set a record for quarterly capital deployment activity, and actually beat all of last year. If you look at late stage venture growth deals, which is a very good welcome signal, we do still think, though, companies and investors are being very disciplined, and they should be.
And capital raise. So the IPO, that's clearly one way. What are other ways that companies are raising money?
Yeah. So if we think about, the private market ecosystem, which has really evolved, as we talked about previously, the past couple of decades, the one path is to raise private capital, right? And the private capital asset base has increased dramatically over the past couple of decades. Companies are staying private longer. More investors, institutional and retail, are looking for access to assets and growth they typically haven't had access to in listed markets. When you think about exits, right? Typically you have public markets, right? Whether it be IPOs or direct listings. We had that SPAC period. So that's always one path. M&A is actually typically 2/3 of the exits with our ecosystem. And we've seen M&A activity pick up. And the third bucket, which is increasing, is private market, what we call secondaries. So owners of private assets selling to other private market investors. So this secondary market liquidity is increasingly becoming a source of capital raising and liquidity, as the exit environment the last several years has, quite frankly, been pretty dry. So it's evolving a bit, but those are the three main areas.
Yeah. And then what about different sectors? We've talked about some of the, the stable coins and space, and there's some really interesting innovation going on, I feel like, in the economy right now. What are you seeing? Where are the hot areas and a lot of investor interest?
Yeah, well, we are, to be self-promotional, we're excited to have been involved in Circle, which is obviously kind of a digital assets, stablecoin platform. We're in a company called Omada that also listed last week, which is kind of in that digital health ecosystem. We have a company, Voyager Technologies, which, we expect to be a public company pretty soon. They're in the space economy, defense technology. We have another company that's filed to go public called Cerebras, which is in kind of the next generation semiconductor landscape with better power efficiency. So I think if you look at it, technology innovation touches almost all sectors. Areas we're very excited about tend to be those themes. So kind of space economy, defense tech, artificial intelligence, right? Machine learning, also infrastructure related, vertical integration of energy, digital health, cybersecurity. Those are the areas we've been focusing, I'd say, the most on.
Yeah. And what is about those areas? They're getting a lot of investor money. They're kind of in right place, right time in terms of where we're headed for the economy.
Yeah.
Is that what?
Yeah, I think there's growing needs for solutions across all those categories. And so we're seeing significant capital flocking to those sectors. And you're seeing some of the smartest money in our venture growth ecosystem kind of allocating to these areas. And we're basically watching it evolve. We're looking at the category leaders and frankly been seeing a way for us to build exposure for our clients.
Yeah. Okay, Christian, thank you so much for your insight.
So
very interesting times.
Thanks, Jane.
Thank you.